I'm Peter Gelman of Palmerston Group Advisors. After a life of investing for myself and my family, and over 20 years of doing financial planning and wealth management on behalf of others, I'd say that if you want to allocate a dollar to investing for the purpose of long-term capital appreciation or just capital appreciation, be prepared to be patient. Be prepared to leave that investment alone for at least 7 or 8 years, or preferably 10. That's time allocation, the capacity to be patient. In a way, I think it's even more important than asset allocation. You never know when a bear market is going to hit. If you need money to pay next month's mortgage, that money should be in your bank account, not the stock market. If you're investing, you want to buy low and sell high. Nothing new there. One of the key ways to avoid selling low is to avoid getting stuck in a position where you're forced to sell when you don't want to. If you accumulate an emergency fund, and if you have a portion of your investments allocated to moderately conservative holdings, then you have money to access when you need it. Then you're in a position to be patient with the rest of your investments and outlast the market downturns, which inevitably do happen. Try to think in terms of time allocation on what you can afford to live without in the first instance for 7 years or more than that. How much can I live without? This assessment should be at the very beginning of investment planning. If you can get yourself to the financial point where you can wait things out, that's good time allocation. And that should provide peace of mind. The more you can be patient about your investments and ignore the short-term ups and downs, and especially the downs, the more you can skip the worrying. If you get the time allocation right, I would argue that the investment process and asset allocation should get easier. You're looking for high-quality companies and industries which have excellent prospects over the long term. Warren Buffett is famous for saying that he likes to invest in businesses that are so wonderful that an idiot could run them, because sooner or later, one will run them. Where your investment horizon is going to be 7 years or 10 years or longer, investments in high-quality companies with entrenched market advantages and market leadership are likely to earn good returns on the capital that they invest. Your ability to be patient allows you to reap those benefits. One example of how good time allocation works in your favor is retained earnings. Highly successful companies hold on to a lot of the profits and reinvest them effectively. Retained earnings fund growth and expansion. And sometimes those companies use part of the retained earnings to buy back their stock. Bear markets allow those companies to make even better use of their retained earnings. They buy back more of their stock because stock prices are lower, or they buy assets cheaply because they're on sale, or they pursue growth more efficiently. This is the best kind of leverage, leveraging the advantages of being a market leader against the weak points and weak times in the marketplace. And if you're able to be patient, investments in these kinds of companies means that you benefit from this leverage. And here's the icing on the cake. Historically, if you look at the S&P 500 annual returns in rolling decades, that index is up on average a bit over 7 years out of 10 in any 10-year period you choose, on average. And while historical results are no guarantee of future returns, that means that even when you're practicing time allocation and being patient, there are still likely to be plenty of opportunities to take profits along the way. Thanks for watching.